Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. And before we start, just give me a second because I'm having a error message here. Just 1 second. Let me try to fix it. Okay, I think I just fixed it. Sorry. I'm having some issues here on YouTube Studio. I don't know why, but okay. So let's go. Let's jump into the charts. And I hope you guys are doing well, having a great day or a great night. And don't forget to smash the like button and subscribe as well. Let me see if everything's okay here. Just 1 more second. Yeah, it looks okay now. Let's go. So first things first, let's take a look on the bigger picture. And let's see the chart naked. Okay, so let's take a look on volume as well. Okay, folks, so we have just 1 second. Oh, it's right. So we don't have so far a strong bullish divergence or any divergence at all, which is not bad. Okay, it's just natural. This is great. But for volume, we have raging volume. As I also described it before, the first one was for Ripple partnership, and the second one for Uber. You guys are aware of that, so yeah, let's go. And this candle right here in the monthly, we have like a 45% rejection, which is not amazing, but it's not the worst scenario. And let's take a closer look on the weekly. Okay, so here on the weekly chart, we still don't have great news. We had a partial rejection followed by bad hammer, big rejection, inside bar, another hammer. So on the weekly is not looking great, okay? And I believe we may see a move down because we need that higher low that we talked before, okay? That's going to be the trigger, the signal for the bulls that the trend reversed. That's a different behavior from now on. Okay, so this is my 50 cents. It is true, but unlikely that we may go up from here. But it's very unlikely, in my humble opinion. Okay. Now let's take a look on the 3 days. Yeah, so as you guys can see, despite the fact that we are still trading inside, we have this big shooting star. Okay, so this is a very significant bearish behavior and also a call for the bears. Okay, this is not great for the bulls, but again, since the previous bottom and the higher this lower low, the bulls is still in control for this range. Okay, so this is the reason we need a healthy higher low. Okay, that's going to be amazing for us. Let's go to the daily now. So it's not clear on the daily, but on the 4 hours it is. Just a second. Okay, so a friend of mine was asking on Twitter if this is a cup and handle. Okay, and the thing is, this is not a cup and handle. Back in the day, I talked about it. When you let's say you only acknowledge cup and handle scenario, okay, in every perspective you look at, you will find a cup and handle. This is the power of suggestion. You can find everything you are looking for, okay? our mind can trick us all the time. So if it's not clear, it's not there. If it's not symmetrical, it's asymmetrical, and we have to identify it properly before trying to call for a pattern A, B, or C. Okay. Um, if someone out there call this a cup and handle, and presuming this person is going to long here, we will end up racket. Okay. Because most of those folks, they don't trade their ideas. That's the bigger, the main issue. I mean, so they can call for anything. They don't care. They don't trade. Yeah. So the thing here is, folks, as you guys can see, our lines, our key levels is still very, very significant. Just 1 second, because there's another one here. I didn't address this one before, but here it is. Yes, perfect. So the thing here is what we have here. Okay, so another thing about the gap, because some people, it looks like they worship the gaps. Okay, so it's like, oh, we have to close the gap, we must go for the gap. No, that's not true. Okay, because for later bullish or bearish continuation, all the gaps will eventually be filled. Okay, so this is like a nonsense way to look at the gap thing. So let me see if is there anyone here. Oh, okay, so all the ones in the left here were closed already. Let me see here on the left. No, so no big deal. There is a small one there filled. Yeah, so no big deal. And the thing here is what we have here. So this one here not filled, but probably is going to be filled soon. But in my opinion, it's not a big deal. Okay. So going for the patterns, what we have here, I will start from outside, then I will go inside. That's the proper approach for the pattern system. Second, so this one I should do something like this. Okay, but you won't be able to see, so I'm going to draw in a way you can see. Okay, but again, this is accurate and this is speculation. Okay, so this is just for the sake of this example, nothing else. Let's go, let's start the draw. Hold your heads. Okay, so for now, for this point, I'm going to address these two ranges here, and now we are going to look why. Because, so again, second. So this structure right here developed in a bearish way. That was the exhaustion or the lack of momentum for more bullish continuation. Which we know it's okay. There is no problem to stop before continuing. Okay, that's healthy. That's the kind of moves that we are looking for. So we have the first bad one, and now we have the second. This one here, we are going to take a closer look, but not for now. But so far, still bearish, okay? And this structure right here, it's also speculation because it's not complete yet. But we have 50% more clues that something like this, it's a megaphone structure, expanding one, okay? So it's not bearish, it's not bullish, it's not the best that we can have, but we work with what we have. And the thing here is, that's the time for the magic. Just 1 second. Yes. So what we may expect here, okay, presuming we are right and the whole stock market is going down. If you saw my Dow Jones video, you know what I'm talking about, and so far we are accurate. Okay. So presuming this is going to play out, we can expect, let's use the first one here and the second one right here. I know there's a lot of lines. Let me clear the lines so you can have a better understanding. And forgive me, English is not my native language. Okay, so the first range here, folks, for the first line is on 38%. Okay, it's the golden meaning first range, and a retrace here, and then if we keep going up after this level, it's all the way bullish, ultra bullish. Okay, otherwise we go for the second option, which is the average price for the whole structure from the bottom to let me see here, $4.05, which we have a 9 again, 9, remember the number. And yes, and if only the average is not enough, which I believe if we go through 50, we are very likely to go to 187, okay, which give us a 6. And a move right here, in just a second. Now I'll bring back the lines because I need it. So again, if we stop here and we go up, it's ultra bullish, okay, but so far we don't have evidence, right? But we are looking for possible scenarios. If we make it to 50, we will watch how the price will behave, how it will develop, move, and if we find any red sign or bearish trigger, we will look for $61.80, $187. And this, my friends, this is the safe harbor for later bullish continuation in trend reversals. Okay, I bet my shoes, not only me, but also other traders and investors, they are looking for the same level. Okay, so for now, this is the key level. Okay, and if we can even go a little below, there's no problem. Even at 1680, okay, we still without any bearish confluence. And so for higher lows here, let's draw the lines. For optimal scenarios, just 1 second. So I'm going to address all the 3 levels, all the 4 levels. Just a second. Let me change the color so you guys don't get lost. Then I will clean the chart because I don't like too much stuff on my charts. Hold on, we're almost there. Just one more. Yes, so this is the projection for higher lows based on Fibonacci. Okay, and like I said, this range right here is where all the smart money and professional traders will be waiting for. Okay, it is also true that it depends on how much and how the stock markets can go down. Okay, but in my humble opinion, I'm not going to look for the first one and not for the last one. Those in between the 50 and the 61 second. Yes. So the 50 and the 61 are the key levels for me, and I will look for both. Okay, and so for this structure right here, some kind of behavior that we may expect from here, if we follow what we just had before, we can end up with something like this. And here is going to be key to understand the direction we will go. Okay, doesn't matter how the price develop here. For a better example, I don't think we can make a straight move here, but yes, it is possible. So something like this doesn't need to be 100% accurate, okay? That's not a rule for the lines. The lines doesn't matter. The upper line and the lower line are just one representation of something that is happening, okay? Most folks freak out when the lines are just a little above, just a little below. Not a big deal, okay? And so, yes, now let's take a closer look to see what is happening. I mean, to give more details. Hold your hats, cool your jets. Just one more second. Yes, I like things really straight. I don't want anything messing around. Just making sure everything is properly placed. Yes. So folks, this behavior right here, it's bearish. It's not bullish at all, okay? The other way to look at it, let's make a draw here. Just give me one more second of your precious time. Okay, so doesn't matter if we are crossing because it's bearish and we know the behavior, okay? So if I do something like this, it would be accurate and valid. Yes, it would be, but doesn't reflect the price, the proper price behavior, okay? That we are acknowledging here. Because this line, I am using the first one here, the second and the third. And as you guys can see, we had a break, okay? So this is the proper way to place the lines, okay? I'm not going to follow what already broke, okay? That's not the goal here. And so, as you guys can see, it's bearish, already broke bearish. 1 second. So, as you guys can see, after we broke bearish from the main structure, we end up with a flat bottom with a breach. A small one, but we have a breach, okay? And again, this is not bullish at all, but like 1% or 5% chance to end up with a bull break, okay? So we are not going to acknowledge scenarios with lower probabilities. And so folks, for now that's it. I believe we covered everything, and now we need that healthy higher low to give us more confidence for the upside move, for our continuation. Yeah, so guys, don't forget to smash the like button, share with your friends, and subscribe as well. And in a few minutes, I'm going to bring a live stream about a topic that's very key and important. Okay, I don't believe you are going to miss this one out. Hello my friend, please I'll dump them MG stocks if MoneyGram don't use all the... No my friend, MoneyGram it's using Ripple Net technology. It doesn't mean if it's ODL, if it's Ripple Cloud, it doesn't matter. They still up to it. Okay, they won't make $1 million deal to like 1 month, 2 months later, you know, broke everything, leave it behind. That's not how it works. Okay. Carl, thank you. You are welcome, Carl. Thanks for another lesson. You are welcome, Jen. So, folks, thanks again. Thanks for your time. Thanks for your patience. Stay tuned. Okay, the next video is going to be mind blowing. Okay, and yes, thanks again. See ya.